Who wants to get paid? I know I do. Hi, I'm Courtney English, business and trademark attorney, and I want to talk to you about how to pay yourself from your limited liability company. So before I dig into this, I want to point out a book I love, and we're going to link it here. It is the Profit First method. Profit First has just been revolutionary for most of my clients and really in my own business when I first got started as well. So I highly recommend that you give it a read so you understand the finances in your business. Now, you might be thinking, why is an attorney talking to me about paying myself for my LLC? Is it an accountant job or a CPA, or is it QuickBooks job? Or wait, whose job is it? And I get asked that one too. Who do I talk to about how to pay myself? Because CPAs are tax people, right? And all the other good questions I get asked. So I'm going to dive into this as not only a lawyer, but as a business owner. So first off, your limited liability company should already have a business bank account set up. If you haven't watched my videos or you don't understand the protections of that, it's really important that we have everything separate. So from the get-go, we're making the assumption that your LLC has its own business bank account. All those funds are going into there. Now, it's time to pay yourself. How do you do that? So simple from the logistics standpoint, you can transfer the money, write yourself a check, do a wire transfer, whatever makes sense, process it through payroll to come to your personal account. We are never paying ourselves by running our business debit card at the grocery store or keeping track of the kid activities. We're not doing that. That money needs to be moved from the business bank account into your personal bank account, first and foremost. So then the question comes, well, how do I know how much? And when do I do it? So this is where it gets important. Number one, you have to determine your tax status. Are you taxed as an S corporation or a sole proprietor? For our purposes, we're assuming that you're a single member LLC. If you are taxed as an S corporation, you do have an obligation to run payroll. That means you have to cut yourself a W-2 like you're an employee of your business. Now, that doesn't have to be all the payment you pay yourself. It can be that plus a draw, which we'll get to. But keep in mind, if you are taxed as an S corporation, you do have an obligation to cut yourself payroll. It can be a little bit, it can be a lot, but that payroll has payroll taxes. So you will run that through a payroll processor. Your accountant could do that. You could use Gusto, Paychecks, ADP, however you want to do it. But you want to make sure that you are running it through an actual payroll processor so the necessary payments for taxes come out as if you got a check and you work for somebody. So that's your first step, determine that tax status. So you know if you have that obligation. Now, once you've determined that, and let's say that you go ahead and you cut yourself payroll, but you still want to pay yourself more, that you don't want to run through payroll, or alternatively, you're just a sole proprietor and you don't have that obligation. Now we're talking about what we call an owner's draw. An owner's draw is the money that you will transfer to yourself, to your personal account that does not run through payroll. So it's not taxed as a paycheck, it's taxed differently as self-employment draw. Now, a draw comes directly to you. So again, we're not running it through payroll tax, things like that. So you will actually move that money to your personal account from your business account. Simple as that, right? Now, with a draw, I want to point out a few things. One, you're not withholding taxes like you are on a payroll. So it's important that you've calculated for where those taxes are, how much they need to be, and that they're put back. So it's time to pay them, you can pay them. And two, with a draw, you need to document it and be consistent. So if you're paying yourself on the 1st of the month, the 15th of the month, whatever that may be, just be consistent and document what that draw is. Because remember, it is not running through payroll software. So the tracking on it is different. So you need to make sure that you have a way that you're tracking it. You do this in QuickBooks, you can do this on a spreadsheet, however you want, but you have to track it some way. Now, let me back up for a second because this is my other favorite question. Well, how much do I pay myself? Where are my margins? How do I know my profits? And this is where it's really, really important that you followed my other advice and you have your business bank account and you're running business expenses and income through that account. Because initially, that's pretty much your P&L, your profit and loss statement. When you start out in business or you're at a couple years, even at this point in my business, it's still pretty close to a P&L for me. So I can pull a business bank account and I can look through it and see where those profits and expenses have been each month. Now, what you're going to do, if you follow the profit first method, you take your gross revenue and you divvy it into buckets, percentages. So let's say 20% goes to taxes. This is just an estimate. 2% goes to your profit account. Maybe, 40% goes to payroll. So you start kind of breaking out into percentage of buckets. So at the end of the month, you can sit down and reconcile. Let's say that you grossed 10 grand. You can take that percentages of that 10K and put it in the relative buckets. That'll make sure your people are paid, you're paid, taxes are paid, overhead's compensated for. And it really just kind of gives you a good cushion and a good way to flow your business so you can pull out a paycheck, even if it's just a little bit to get go. A common split I've seen, and again, it depends on your business, will be paying yourself 50% of your gross income. Again, you got to check your overhead and make sure you can, do that plus your taxes. But let's say you make 10 grand and 5 grand goes to your pocket and the other 5 grand gets split between taxes and overhead. If that works for your business, then great. But you have to play with that percentage and that allocation a little bit to see what works for you. That's where business ownership comes in. It is totally up to you. So that's how you pay yourself out of your LLC. Those are some tips on draws and W-2s, as well as different ways to allocate your funds. Make sure you can pay yourself consistently and document it. Like, subscribe, ask questions if you have more. Thanks.